asset. Old asset means this is the old asset. You now minus. So you minus. Between this and this, whichever is lower, that's what you are going to use to minus this. Let's assume this is 500,000. You said asset, and then this is 600,000. 500,000 is less than 600,000. So which means you are going to say, and let's assume this cost of acquisition is 400,000. So between 500,000 and 600,000, 500,000 is lower than 600,000. So which means, so you now choose 500,000. That's there. 500,000 minus 400,000. So which means the amount you roll over is now 100,000. Amount rolled over is now 100,000. Yeah. So please note that. So net, remember this is just a format. So which means the amount you roll over. So here you now bring the amount you roll over here. Please. And of course, this amount must. So if the amount you now minus, you're going to get now your capital gain, the net capital gain now. You now minus the amount you roll over from this capital gain, you get your net capital gain. So whatever you are is called net capital gain. Yeah, which means you. Then, of course, your capital gain tax is a 10% of that net capital gain. So that's how to determine your amount to roll over and also the capital gain tax in case. Yeah. So please, I know this place, by the time we solve the question, you're going to answer much more. So that is the format. So we want to now look at a question to buttress what we are saying. Thank you. We want to now look at the question under this capital gain tax, that's under the rollover relief. Yeah. And we want to look at this question called, okay, this question says, White Cleaner Limited is involved in a dry cleaning business. The company acquired a building for the business within the Shoniba Red Estate, Maryland in the year 2001 at the cost of 25 million. It's also acquired dry cleaning equipment and generating sales at the cost of 5 million and 3 million respectively. The one location of the company couple. So, okay, now it's not even the most important here is that the moment in the question you hear the word that they've sold a particular asset and they now use the money to buy another asset, just knows that that question has to do with the rollover relief. That's how to know because, of course. So, if you check the requirement now says you are required to compute A, capital gain tax, B, rollover relief available if any, C, capital gain tax payable, D, cost on which capital allowance will be granted to the company based on the newly acquired asset. So that is what we want. So, okay, we want to divide the bond into two. So in that case, the first thing is that we are asked to compute first the capital gain. Yeah, that's the first thing, capital gain. So in that case, we have White, that's the name of the company, White Cleaners Limited. Computation A, we are looking at A now. Computation of capital gain. Are they? Yeah, just capital gain because that's what A says we should compute. Computation of the capital gain. Okay. Now, since we have three, if you look at this question, we have three assets, building equipment and generating sales. So please, our advice is for you to take it one after the other. Building, the other sign. So the first thing remember is sales proceed. Of course, like in this question, we don't have any incidental expense that we are going to remove from that sales proceed. Okay, the sales proceed for that on disposal of that building, we are told that is 30 million. Yeah, there is no incidental expenses. Then the cost of acquisition now, cost of acquisition. How much did we acquire the asset? The asset was acquired for 25 million. So 5 million is the capital gain. Yeah, 5 million is the capital gain on that asset. So let's go to equipment. Equipment, sales proceeds. The sales proceed is 3.5 million. The costs of acquisition is 5 million. So which means this is a capital loss. This is the capital loss. So the loss here, the loss is 1.5 million. 1.5 million is the loss in this case. So our loss here is 1.5 million. So capital loss is 1.5. So let's go to the third asset. The third asset is called generating set. Generating sets. The sales proceed. Sales proceed from the disposal is generating set is 4.3 million. 4.3 million. Then costs of acquisition is 3.5 million. The difference is 800,000. 800,000 is the capital gain. Okay. So this is A part of the question. A said computation of capital gain. So let's go to B. B now say we should compute for the rollover. B. Computation of rollover relief. Let's start with the building. Of course, for the building, still, you still go back and say sales proceed. Still go back and say sales proceed. You know, and the sales proceed is 30 million. The costs of acquisition, the cost of acquisition for that asset, the cost of acquisition is still 25 million. 5 million is still going to give you the capital gain. Okay, continuation. So, continuation please from here. So we are going to say the rollover relief lower of is the lower of the sales proceeds, which is 30 million. Okay. How much did they use in buying the new assets? That's what you are going to ask yourself, because remember we say amount reinvested. Remember, they buy another building after selling it. And that building they bought, we are told that that building was, acquired again. The new building was acquired in Victoria Island for 65 million. For 65 million. So, in that case, between that, then cost of acquisition, cost of the old assets. The cost of the old asset is still 25. Now, one question I have to ask yourself is this. Between 30 and 65, which one is lower? Is still, it's still 30 is lower. So 30 minus 25, which means the amount rolled over is 5 million is what we roll over. Yeah. Of course, your net capital gain, is still nil, because 5 million minus 5 million is nil and all that. So that is for building. That's for building. So now we want to look at now for equipment. Of course, equipment has a capital loss. And anything that has a capital loss, we are not going to even enjoy any rollover relief on any capital loss. So we are not going to calculate any rollover relief on. So here you are going to say yes. The answer for this is yes. There is a rollover relief for building. That's answer. And yeah, the rollover is just 5 million order. So that is that. So the last, I want to go and look at now that of a generating set. Yeah, that of generating set. Now I want to look at that of a generating set. Remember I said equipment, there is no rollover relief on equipment and all that. Okay, is there equipment? Yeah. But let's check, because equipment has, you know, the sales proceeds actually is less than the cost of acquisition, so which means there's no rollover relief on that. So let's go to generating set. Let's go to generating, whether there's any rollover on generating set. So that's the B. Remember, we're still on the B part of the question. Generating set. Sales proceed. The sales proceed on generating set is 4.3 million. Cost of acquisition of that generating set is, cost of acquisition is 3.5. So 800,000 is the capital gain. Then roll over relief, lower of sales proceeds. Our sales proceeds 4.3 million, or amount reinvested. Remember I said amount reinvested is what you use in buying a new asset. And the new asset was acquired for how much? How much did we acquire the new asset? That's the new asset was acquired. That's generating set. I think is generating was acquired for, you know, for 3 million. So 3 million. So again, cost of acquisition, cost of the old asset, which is 3.